Hey, Aquarius. I'll try and give you a quick answer for all your questions here. Um, the first one here, I used to SupDem mod to draw spot. I tried some this weekend and saw differences between various indicators. Maybe a list of them of explanation would come in handy. I'll just get on to the indicators first. This is a basic template, what they have in Ace Gazette. And the thing is, these are basically all the indicators you're going to need if you do use them. So first of all, you got your moving average. That's the 200 EMA there. That's giving you a trend direction. That's you got that one. Then you got the KS Semaphore 3 mod. That's this one. This is giving you the highs and lows of swings, the swing points, the reversal points of the price and that. This is the higher extremes, and this is your mid levels. These red dots, these are mid extremes. Next one's SupDem mod dark background. That's the supply demand indicator. This here. What you find with supply demand, it's not perfect, but it does a really good job. But as you get better in that marking up levels, you'll know where some of them you can ignore and others pay attention to. Next one's the pivot points. I don't use it much, so I'm not 100% sure of how to explain that. But what I can gather is it's just the high and low of the day, and that's the mid-range, I think, how it works, or break of support. But I don't use it, so I can't give you 100% explain. But that's the high and low of the day. Ace Gazette info panel, that's here. As you can see, it explains the high, low of the day, price now, the spread of the pair you're on your network, your feed, your broker. 5 days, I think that's the 69, the pips that it's moved average during the 5 days. ATR's average 20 days. Next one is RSI TC new. That's the RSI. Well, I think this goes just on divergence. So if price is going up and the RSI is going down, get ready to look for a shorts, because if RSI is turning down, if they're going opposite directions, divergence. Other than that, if it's over 60 or below 40, I think that's when you look for price reversals. So if you've got it at extremes, that's when you start looking for price reversals. That's basically all the indicators. Now, it's up to you if you want to use all these indicators. You don't need any other indicators. This is all that's supplied in Ace Gazette. But going on this, I've seen a lot of seniors now. I've spoken with a lot of them aren't even using most of these indicators. I know Ken. I spoke to Ken the other day. He just says they're on there for show now. His indicators, because he's been at this for so long now. He's got a feel for the market. He doesn't even need the supply demand indicator here, but he's experienced. But for him, it's better to have it here. It's quicker to scan a load of pairs, so he can quickly scan pairs because it's there, ready and done. It's easier. Or else he could do it without it, but it just takes a little bit more time. So for him, it's handy having it here, so he uses that all the time. All the others, I asked him, he said they're just there for show. He does look at it, he says, oh yeah, we've got divergence there, that lines up, and at times he might look at it. But for now, basically the supply demand indicator, that is basically what he uses for now, the main thing, to scan pairs quickly and check them out. Your next question. I've set notifications 12 pairs to give signals supply demand levels. An hourly chart is reached. Now here you're saying the hourly chart, that's a lower time frame. So I don't know if you're trading scalping trading, but if you're going to set alarms, you could be better off. This is just my opinion, but a lot of the seniors are doing this. You could put it off the daily or 4-hour time frames. The higher the time frames, you got solid levels the price is coming into. So maybe put the alarm on the higher time frames, the daily or the 4-hour, because the higher levels they're stronger. And then once your alarm goes off, quick you can drop down to your 1 hour, 30-minute or 15-minute for entries and that. Just that way you've got a better, at least you know you've got a solid area, you've got a good chance of reversal. Your other question. maybe I should incorporate trend daily or weekly chart, act on a single direction of the trend on a higher time frame. I'll have to think it over. What you could do, a basic plan, because I've spoken to a few seniors and that, and what they do now, I notice Ken, if you look at his charts now, he does a lot of 4 hour time trade, and he just trades off that time frame basically a lot of the times. And then the odd times he'll trade off a daily, use a daily time frame. But what you can do, what most seniors do, daily and 4 hour, but a lot are focused on the 4 hour. But you could do just the daily to 4 hour. So use those for trend direction, and you can actually enter it on the 4 hour time frame, and just find signals on the 4 hour time frame. Actually, let's just go. I'll just go to the basic template. This is it here. This is basically what I use. So you can just ignore all those indicators. You don't really need them. Now, if you look at it, you can see price clearer what it's doing. So what you can do, go to the daily, put your indicator, you put your alarms on there. Use the daily for trend direction. Where's the price going? Because if you look at the daily, look at the good strong signals. You've got a nice bullish engulfing coming out here, bullish engulfing here. Pin wicks. You got a retrace here to the fresh demand entry. Here, bullish engulfing. Here, pin bars, retrace the area, pin bar signal out, bullish engulfing. Bullish engulfing. Here, I don't know, it's a signal, a 3 bar. That's a bullish engulfing 3 bar. It's not really a signal. I think there's something in the ACZ about it, but I notice these work a lot. Here again, bullish engulfing. So you can see if you just use just the supply demand indicator, this with a clean chart, you can see how good it is. Now you can see this is a daily. Now you can see how good the daily time frame works. You might have to wait a bit longer for them to work out, but as you can see, they're very good, solid, strong signals. Now what you can do, as Ken does, he just trades off to the 4 hour a lot of the times. You could use the 4 hour and just set your alarms. And as soon as price hits these areas, look for good signals coming out of them. Now here you got a bullish engulfing. Here you could almost call a bullish engulfing, but anyhow, a bullish engulfing. But you're better off looking. If you can't see any good signals, there's not many clear signals here. But if you don't get any good signals, look for another pair. Don't waste your time trying to force a trade, because all that's going to do is cause misery. So just try and find clear signals. So for swing trading, look at the daily and the 4 hour. And that's it. You can just do that for swing trading. Now, a lot of seniors now, what they're doing, they're using hourly, 30-minute and 15-minute for scalping. Because if you go through, you'll see a lot of people now, they use the 1 minute, 5 minute, they realise it's a bit of a headache, too much stress, and not stress, just wears you out. It just takes a lot of time. You've got to be really focused on that. So what they're doing now is hourly, 30-minute, 15-minute for scalping, which works really good for them. And they got time, they can get trades in and look for other trades at the same time. So you could do that hourly, 30, 15-minute, just focus on those for scalping if you want to do scalping. So it's up to you if you want to do swing trading. Look at the daily and 4 hour for swing trading, because they're good solid signals. Or for scalping, you use the hourly, 30-minute and 15-minute, so hourly for trend direction. If you want to get a bit more solid on the levels, you could use the 4 hour for trend direction. But as it is, I know now they're using the hourly 30, 15 minutes, and that's basically it. So just try those ideas. I don't know if they'll help to get you started on that, but see how you go with that then. Okay, mate. Cheers. Bye.